All right, so for those that are new to trading, first thing you guys want to do is go to Baby Pips. BabyPips.com offers literally an entire free course on retail trading for Forex. This will get you up to par with literally everything. It'll teach you what a pip is. It'll teach you what a trend line is. It'll teach you what Forex is, how to trade it, how the intricacies work and all that. And we'll go into a little bit more advanced trading methods. So let's see. Yeah, preschool would be currency trading, Forex trading. Like y'all can see what it is. It's what is Forex, what is trading in Forex, buying and selling currency pairs, market size and liquidity, different ways to trade Forex. We can go to kindergarten, which is Brokers 101, 3 charts of analysis, types of charts. Just keeps going on and on. And it'll teach you everything. Just the entire basics entirely for free. You can finish this all in maybe like a weekend of just actually studying. And it's pretty cool. I like it. So definitely have babypips.com in your bookmark section if you are not familiar with trading yet. For those that are into trading and still like don't understand the concept of fundamental analysis, such as news and everything, be sure to have forexfactory.com in your books as well. And I'll kind of teach you guys how to go over this. All right, there you go. Hold on. Let me fix this real quick. Today's the second, right? All right, here.
Yes.
All right, so when you first sign on to Forex Factory, it's just going to look exactly like this. You'll have gray folders, yellow folders, orange, red, and you'll just have the day. What we're going to do is actually click on that button. We're going to go to 29th of September to 5th of October. This gives us the entire week's worth of news. And y'all can see we got a little busy week here. It's mainly because NFP week and a couple of other employment changes. But to clear out a little bit of the noise and some of the shit that's not as useful, we're going to go to filter, take off gray, take off yellow, because those are either non-volatile or low volatile. What we're going to keep is the medium volatile and the high volatility. Unfortunately, we can't filter out speeches, so that kind of does us wrong, though. All right, today is Wednesday. We got, actually in 20 minutes, we got trade balance coming in and orange folder for AUD. So we might see a little something with AUDs, AUD pairs. So AU, AN, EA, etc. Tomorrow morning, we got USD, orange, FOMC member Evan speaks. So to kind of filter out another little bit of bullshit with the news is anytime you see speaker, etc., someone's talking, don't worry about it. It will not affect the market at all. What will affect the market are numbers. So if you see anything that involves numbers, here, all of these, those affect the markets. Reds, oranges, etc. To actually understand how to trade news is another thing entirely. If you don't know how to trade with news, it's best to just stay out of trades while news are going down. There's a few Telegram groups you guys can actually follow. I'll send the link if you guys want me to those groups. There's a few of them, and they're all very helpful. But when it comes down to it, when you start learning more advanced trading techniques such as smart money, Wyckoff, etc., you can actually use news to your advantage because it's all pre-planned. It's all planned ahead of time. None of this news is just random. These are all planned months, years, decades in advance. Something to push price where it needs to be. So that's Forex Factory. Now, for those who are trading live and are curious about lot sizes, how much to risk, etc., this website right here, MyFXBook Position Size Calculator, is the best tool you'll ever use. A lot of the people on the team actually use this to leverage their accounts properly and are able to flip their accounts almost within a week or 2 weeks just because of this. So account currency, let's say we have a account size of 100. Risk to reward ratio. So proper way to account for risk management is to risk 2 to 3% of your account per trade. So we'll just do 3, and that's a lot. Most of our stop sizes are between 5 and 10 pips. So for example, we'll go with a 10 pip stop loss on EU. So calculate for us. And we are risking $3 if we lose. So our lot size for a $100 account for a 10 pip stop loss risking 3% of our account is a 0.03. Let's say we got a $200 account, want to risk 2%, stop loss is 6 pips. Recalculate. So we'd use a 0.067 lot size, and we'd only be losing $4 if the trade loses on a $200 account. And if it does end up going our way, we can get 20, 30, 40 pips and profit that many pips. Now, we go on to TradingView. I highly recommend you guys get a TradingView account. It is free. You don't have to pay for it. If you want to pay for it, it's like $17.99. And that's just a premium to get all the goodies. So on the right here, we have the watch list. These are all the pairs that I look at. All of them are USD based, except for the dollar currencies here. We got Australian, European, British, New Zealand, Japanese, Canadian, and Swiss, as well as DXY, which is American currency. So what I'll do is I'll go through all the currency indices and just kind of mark them up, see where price is going to go that day, that week, that month, etc., and just kind of see where each individual pair wants to move. And so if I see EU is going up and DXY is going down, what do you guys think I'm going to do with EU?
Up.
Yes, sir. We're going up. So the simplest way to kind of put it, let me write it down. All right, if DXY is bullish, which if for those who don't know, bullish and bearish, bullish means going up, bearish means going down. Same thing as dovish and hawkish. Hawkish going down, dovish going up. XXXUSD means AU, EU, GU, NU, etc. It's the base pair versus the asking pair. That means XXXUSD will go down, and USD XXX will go up. Vice versa for DXY bullish, bearish. Make a little more sense to y'all?
Yes.
All right. And that's pretty much the intro to TradingView. When you guys first make your TradingView account, y'all are going to notice your appearance is going to look a little different than mine. It'll actually look more like this. You'll have red candles, green candles. Oh shit, I got them backwards. My bad. No wonder it looked weird. I'm using, that's why. Yeah, there we go. Your candles will look like this, red and green candles. You'll have the gray bars in the background. You won't have the trademark on the back. So what you do is go to settings, double click on your chart, change bullish candles to white, bearish candles to black. But I like a little color in my thing, so I'm going to change that. You're going to go to appearance and take out the vertical grid lines because they are completely useless and you do not need them. And you can add the trademark or watermark, or take it off if you want to. So now onto the basics of the, smart money concept. There we go. So those of you who have been watching me for a while know exactly what smart money concepts is. Those of you who are new, is smart money or inner circle trading or just institutional trading is the ability to trade with the banks. Ooh, yes, sir. What's up, Hunter? But yes, so I'm not sure if you guys know, but this is a little interesting fact. %96% of Forex traders lose within their first year and quit. Which means, statistically speaking, I have 10 people on this call. Not even, maybe one of us will actually be profitable in the first year. And that's perfectly fine. If you quit, you quit. Don't worry about it. There's no harm in quitting. But if you actually want to make it to that next level and understand how to trade, you have to learn institutional trading. The reason 96% of Forex traders lose is because they trade retail. Granted, there's nothing wrong with support and resistance. There's nothing wrong with, I don't even know what the hell that most of them are called. I don't trade them, so I don't know. But they are profitable. every trading method is profitable to an extent. The only issue is that they're high risk, low reward, or high risk, high reward. The best way to make profit in Forex is low risk, high reward. So, for example, let me find a solid, actually UJ would be a good one. No, yeah, there we go. Let me find a good one. I wanna kind of go over what the risk is and all this. Gold? Let's check it out actually. If you want to take gold, go ahead. Actually, I know exactly where it's going. So I'm just kind of skipping over a little bit, but if you want to know about gold, this is where it's going.
What? Oh.
Price going up, price going down, breaking equal lows. I've got it coming down all the way to here. I've got gold going to 1440. I know I just kind of blew through all that, and most of you guys don't understand it. That's perfectly fine. I'm going to go over the basics in a little bit to kind of show you guys why. But that is my current bias on gold. That's kind of juicy, actually. I like that.
Yo, Matt.
Yo,
did you put – so you got a buy limit or a sell limit at that? A buy?
That's a sell limit.
Oh, okay. I thought you meant you had a buy limit down there at the bottom.
Oh, right here at 1440? Yeah. You got a buy limit right there.
Oh, okay. All right.
Yeah. So actually, that's a perfect example right here. I didn't even think about that.
Yeah, because I've seen a lot of people trading. I've seen a lot of people trading gold, especially how it's fluctuating up and down now. So
yep.
I figured it'd be good for you to like at least just touch on that a little bit, since it's like the main currency being traded right now.
So let me go over the basics of the concept, and then I'll explain why gold is going to 1440. And pairing the concept with why my analysis is going to be correct and guaranteeing it, we'll show you why. So for smart money concept, we look for a handful of things. Look for liquidity, impulse moves, and sponsored candles. And in order to find them, what we're going to do is first is find liquidity, find impulse move that breaks liquidity, and 3, we're going to find SC before impulse. I was going to write something else there, but I completely forgot what I was going to do. Oh, that's right. What is liquidity? There we go. So I want to know what you guys think liquidity is. I know some of you guys know, but for the ones that don't, I want to kind of see if you guys can guess. What do you think liquidity could be? Any takers?
Just the buying and selling of the market, I guess.
Somewhat. There's a little more into it. Yes, it is money, but it's not the money that we want to lose, if you're catching my drift. I'll kind of explain that. Yes, Ron, you got it. Liquidity is equal highs and equal lows, otherwise known as support and resistance. Make a little more sense to y'all? And I'll show you why it's liquidity. So, you guys see this green line right here?
Mm-hmm.
What does that look like to you guys?
Support level.
Solid support, right?
Mm-hmm.
So if everyone is buying gold because this is a support level, so let's say they bought right here, what would be all down here under that area?
Stop losses.
Yeah, stop losses. I love stop losses. They make me money. So what banks will do is that they know exactly where everyone's stop losses are. If they see everyone's orders, they know where the majority of people have their stop losses. So what they're going to end up doing is making a fast impulse move down, take it, and then go up. So if you guys have ever had your stop loss broken on a support or resistance, but it ended up going your way afterwards, that's exactly what happened. It wasn't a stop punt. It was just an impulse move taking price where it needs to be.
Oh, wow. It just clicked. Okay.
Oh, it finally clicked?
Yeah.
You've been asking me for weeks, bro.
Yeah.
Yeah, I just had to if you've ever had your stop loss hit when you're trading support resistance, that's exactly why. All right. So y'all can see right here, right? Let me do this real quick. I'm kind of take this away from your eyes. So what do you guys see right here?
Equal highs,
Or
liquidity,
or
resistance.
there we go. That's what I was looking for. Resistance. What do you guys see to the right of it?
Big old uptrend.
Yes, sir. This move specifically, what would this be? If we're checking for three things, what is this on the checklist?
Impulse.
Yes, sir. So now that we found our liquidity and we found the impulse that broke liquidity, what do we look for?
The block, order block.
Haunted candle, order block, institutional candle, whatever the name is. And it will always be the opposite candle of what the impulse is. So let's say bullish impulse. We're going to have a buy to sell to buy candle, which would be bearish. Vice versa for the other way. So if it's a bearish impulse, it's a buy to sell the order block, and that'll be a bullish order block. So now that we found the liquidity, found the impulse, and we found the sponsored candle, what we will do is place our entry at the very top of the candle and place our stop loss at the bottom of the candle. The reason we do this is I actually learned this from Christian. He's my mentor. When's the last time you guys loaned somebody money?
Can you ask that again?
Yeah, when's the last time you loaned somebody some money?
Thanks. Last year.
All right. Are you expecting it back or not?
Most people, yes, but no.
Nah.
But for most people, right, if you loan them money, you're going to expect that back, right?
Right.
Exactly. So what banks are doing right here is they're selling to buy, take out your stop losses. But the issue is that because they sold right here to buy, they're still in drawdown. So imagine the bank loans someone some money and they're expecting it back. It's just $100, but eventually they want it back, right?
Right.
Yeah. So over time, price has to come back, and it's called mitigation. Prices are just mitigating their losses from this order right here, which means price eventually will come down. Which is why when I call this right here, this is another order block or a retracement coming down to break liquidity and take its money back from this last move that before the bullish uptrend.
Mm-hmm.
That's all it is. It's just banks are getting their money back. All right, y'all. I appreciate you guys, and I hope you guys have a wonderful day.